All right. So what is going on? Um, those of you that are already inside of the Discord, you guys already know that I don't plan on trading for the next couple of months to come. I plan on pretty, rocky price action in between the months of December and, going all the way into, February, March, and maybe even late April, before we start seeing better price action. But um, for other reasons as well. I plan to stay out of the markets. But I will still be teaching as well as also giving free content. You know, so the private mentorship students will also get a whole bunch of things. The next couple of months to come whilst I'm not trading. As well as the folks on the YouTube here will also get things for free that they can use. Right. So you can see here on my chart, I already have NQ, ES, and YM. Notice YM's already retraced almost to the mid quadrant of this price range here, right? Or equilibrium. While ES has traded into the 25%, being the upper quadrant, as well as NQ has traded from the upper quadrant to mm, the the upper quadrant of the price range here as well. Okay. Notice same price range here along all the stocks. YM is extremely bearish, pulling all the way down to equilibrium. I'm anticipating ES and NQ to make it down to equilibrium as well. Okay. Worst case scenario or best case scenario is over the next couple of weeks, price trades down into this specific key area, being right at equilibrium, right? Being this weekly fair value gap right here with a low inside of it. That's perfect liquidity for us to bounce out of this area and start to head back lower. Now, worst case scenario I see is over the course of the next couple of months, we're extremely choppy on the weekly until we've retraced all the way below this low, right? While respecting the lower quadrant of this price range here on NQ, and then seeing this be our protected swing low, being down here in the 17,000s, then price starting to retrace back higher, after this low here has been taken. Okay, could be wrong, right? But best case scenario, I'd like to see equilibrium and us drop back down to 19,853 on the NASDAQ. Okay, now as you can tell by the title of the video, we're going to be breaking down the FOMC day. Okay, so basically what I'm going to be doing over the next couple of months is I'm going to be going in and I'm going to be sharing exactly how I would have analyzed the markets on certain key days, as well as explaining why I would analyze them that way, how you can use this to your advantage when you're trading, as well as kind of just give and provide insight on how to navigate price action. Okay, so we're going to go ahead and drop into the 1 minute chart on NQ here. We're actually going to go to the 15-minute chart, and we're actually going to look for December 18th. So let's find that. December 18th. It's found like 6 o'clock. It's found 5:30. Okay, boom. Off the bat, what am I marking out here if I am looking to frame a trade? I'm going to look at our 1 hour chart. What do I have on our 1 hour chart? I have this inversion fair value gap right here. Boom. Got the price leg backwards. So I'm marking this level out. Okay. I'm now going over to our 1 minute chart. And I'm noticing, oh, we still got it backwards. Let's go back to our 1 hour chart. Sorry about that. I don't know why it's still backwards here. Boom. All right. Now we have our 1 minute chart, and we're going to see how price respects inside of here. Notice on FOMC days, you typically always want to trade pre-market. Pre-market is the best to try and trade. Okay. This usually allows for you to trade and hold positions for the remainder of the day, building up and leading into FOMC, which is also a lot better. Goose. But let's let price play out. Notice price here trades into the upper quadrant of this inversion for value gap here. We're going to continue to allow price to play out. Price trades into the upper quadrant of the inversion for value gap. No candle bodies close above. Okay. We're continuing to watch price. Notice we have a red folder at 8:30. So we're waiting until price comes around 8:30. Notice price then again forms a swing high right up here around 7 o'clock with a fair value gap right there. Let price continue. Okay. Notice we have this imbalance here. That is our 1 minute FVG. Okay. You could have taken an entry here, or you can now wait for price to close below minor sell side liquidity. In this case, minor sell side liquidity is here. Okay. Notice we also have sell side here, resting at that consolidation. Okay. So notice if you did not take the entry here on the retracement back into these levels, right? Notice price is still respecting this 15-minute inversion for value gap, or 1 hour inversion for value gap, excuse me. Okay. How price is trading inside of this, we have a turtle soup here as price closes above this high while still failing to expand away from this price range, right? Price closes back into this price range here, expands up into this 1 minute for value gap, price then expands lower. Continue to watch price play out. So I'm looking to take my entry as soon as I see we expand below minor sell side liquidity. Right here, we can see we inverse this for value gap. Okay. As price inverses this, okay. So as price closes below minor sell side liquidity, okay, this causes displacement below the breaker. So let's play out. Displacement below the breaker. We're going to enter here. Stop loss is going to this high. Boom. Okay. Price quickly takes out this minor sell side liquidity level. Okay. I'm going to add 2 to my position. Do my stops at the high of the breaker. And now look at where we should draw towards. Where should we draw to next? Original consolidation, which would be this level over here. Okay. So now what are we targeting? That level lower. Price upon 930. Notice how we're trading below sell side liquidity here. Okay. Price at 930 opens up. We have this wonderful breaker here with also a fair value gap inside of it. Price comes up, taps the fair value gap here, respects it one more time at 930, and then hits our target here. All out of your trade. Okay. So this is how I would have navigated FOMC. I don't trade FOMC itself. That is to me considered gambling because we all know we never know what FOMC is going to do per se, which is why it's best to always trade pre-market. Okay, so just going back in, remember original consolidation, clear buy side of the curve here as we make our way up inside of that 1 hour fair value gap. Draw out the quadrants of that fair value gap. Okay, and when you do so, you'll see how price respects those imbalances to the tick, right? Could have entered here for your first low risk buy or sell, going into 8 o'clock's 1 hour candle, right? 8 o'clock opens up here. We open high inside of this fair value gap here. If you didn't take an entry here, there was another entry given right inside of there. 8 o'clock 1 hour candle starts to expand lower. Have a intermediate retracement here. Price then expands below, leaving this inversion fair value gap. Okay, we can now enter once we displace below minor sell side liquidity. If we haven't entered yet up here, enter upon the displacement. Stops can go above the breaker in our case, or above the high, right? Priced in, take partials at sell side liquidity, being this original consolidation. So these relative equal lows acts as original consolidation for price to then retrace back into there. Okay, now anything below sell side liquidity is more key areas where we accumulated, and that's what we pay attention to. sell side liquidity. We have accumulation here before then an expansion. The lows below this accumulation is our targets, anticipating us not to retrace down to here. That's all we need. Okay, so that's exactly how I would have traded FOMC pre-market. Okay, and I advise you to, um, you know, just be aware of the dangers of trading FOMC days. Okay, super important. You want to be able to be skilled and disciplined on the days that matter and count. Okay, the days that are going to be repeatable, and that's about that's about that's about it. Okay, so hopefully, guys, you learned something from this video. And maybe you could have taken away at least one thing from this video. As well as hopefully maybe I've given you a better understanding of how I personally navigate price itself, okay, using ICT concepts. Okay, so without further ado, I will see you guys in the next video, and peace.